Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 6th, 2022, and we are still expecting a green weekend. Question is, why? What is it in this price action that Bitcoin's printed for the past few months that indicates that a move to the upside is likely, right? However you feel about the market right now and about the charts, most people would agree that a big move is coming, either to the upside or to the downside. So here's why I think a big move to the upside is more likely. If that interests you, then watch until the very end. I'm getting started on the daily chart, okay? Because what I want to do is I want to reiterate my long-term, large-term sort of read on the market, okay? So what do I make of all of this? What do I make of all of this? I've seen a lot of analysts lately just do this, okay? They've just simply made a channel of this price action and said, this is a rising channel, and, based off of whatever, Investopedia or whatever you want to say, the analysis of a rising channel or a rising wedge, or I guess this would be a rising channel, yeah, is that it's likely to break down and you're likely to get something like this, okay? So this is the analysis by most mainstream analysts that I've seen, okay? Now, I'm here to say that that is inaccurate. It's a bit sloppy, actually, right? First and foremost, is this a legitimate channel? It is a channel. You can channel anything, but is this a legitimate channel? Not really. Why? Because you're not really hitting with any bit of consistency the edges of the channel, okay? So in a regular chat, if you really want to channel something, you want to see that the edges or the boundaries of the channel are being tested. That really is what makes the channel, right? So testing the tops and testing the bottoms, right? So here, and I'm on the arithmetic scale, okay? So no log, no nothing, right? Here you see that the bottom of the channel is barely even tested once, right there on July 13th, okay? But the tops of the channels are tested once, twice, right? And possibly going to be tested again. So again, that's not really an accurate description of what's going on. If anything, what you see here is more like the following, all right? So let's just say that this nominal low is also your orthodox low, the bottom of your trend, okay? And if you're subscribed to the channel, you'll know that I have the preceding price action as a double zigzag, okay? So I'm basically taking this as being a WXY, and then all of this being a W, okay? This being an X, and then you get another you get another WXY, okay? That's basically, and that comprises your Y. This is what we call in Elliott wave theory a double zigzag. I've said before on the channel that corrections are some of the most challenging aspects of Elliott wave theory. Most people don't get to that point. Lots of people, when they start talking Elliott wave theory, they count everything as an impulse because they don't know much about corrective waves. But in actual fact, most of the time, the market's in some type of corrective sequence, either intra-wave correction or proper correction preceding a wave, an advance, an impulse of some sort. So this, I think, is a nice, very clear double zigzag, okay? And that's what we put in. So yeah, whether that's true or not, right? I have this as being the orthodox low. At least it is for now, right? It's both the orthodox and nominal low. And what you get from here is you need a reversal pattern, right? Because again, the basic idea is that you can't just hit a low and then start putting in impulsive price action. You need to consolidate first. Okay, so this is what I'm seeing in Bitcoin, and that consolidation to me looks something like this. Okay, you have an initial break of structure. Okay, that's your A wave. I'm going to put that in yellow. Okay, that's your initial break of structure. And you need, every time you get an A wave, you have a corresponding B wave, okay? That is your counter, right? Just like in nature, just like in anything in life, you have a positive and a negative, right? Your A wave, your initial break of structure, is your positive, and your B wave is your negative. So that's your first degree of your reversal pattern, okay? And then in my experience, in my research, in my studying these reversal patterns, these consolidation reversal patterns, also called AB bases by Ralph Nelson Elliott, the progenitor of Elliott waves, these need at least 2 degrees of consolidation reversal, 2 degrees of AB basing. So this is 1 degree in yellow. And here's your second degree. Again, an A wave, a 3-wave move, a flat correction. Let's put this in blue. Okay. So this is your second degree right here. Right here. Okay, so here you have your 2 degrees of AB basing, okay, and that's how I'm reading it, okay. Could be wrong. These are, as I say on the channel all the time, they're tricky to read. It's not that these can't be read as legitimate A and B waves, but you're not always sure the scale. All of this can be one big well, not this. I think that's unlikely. But all I'm saying is that there's a lot of room for error when you're reading corrective waves. So it's a guess. It's an educated guess. But I think that this is accurate based off of what we're getting. Okay, so I really do want to start with my read on price action, because price action is king. Price action is everything. Before you even bring in any indicators, I think it's important to read price action. Okay, and the first indicator, if I want to look at any indicators, I'm going to look at volume. It's as close to, price action as a primary source as it gets, right? So I allege that this is my orthodox and nominal low, and I do see a volume spike here. So that to me does seem accurate. Like, okay, there is a spike in volume here at this low. All right. So I have my 2 degrees of AB basing. After that, on July 13th, I think we began our impulsive price action. And I think it looks like it, right? Like when you get to July 13th, what do you see? You just see immediately you get 7 days of positive price action, okay? And that takes you about 30% to the upside, okay? That to me is impulsive price action. Not only that, if you jump down into a smaller time frame, we're jumping down into the 4-hourly time frame, I think it's clear to count 5 waves here, okay? So right here, you get, and this is very important to why I think price is going up here, because you have to see, there's my 5 wave count right here. So that was my first wave, okay? So saying that I have my 2 degrees of AB basing, I have my first of 5 Elliott waves to the upside, okay? I think that is a good reason why here you can state that this is wave 1, this is wave 2, and you're looking for a wave 3, a wave 4, and a wave 5. Okay, let's go back on the daily time frame. I just wanted to show you the 5 waves in that impulse that I alleged, but I believe that this is very likely, right? So this is just price action, okay? We're going to get into indicators in a second, so stay with me, okay? So basically what I did right here is I took the Fibonacci extension tool of that first wave, retracement of the second wave, and this second wave is a quintessential second wave. It's sharp, it's a 3-wave move, and it basically retraced to the 618 Fibonacci retracement of this initial wave. That's what you typically see in a wave 2. And again, remember, it's not just price, but time, because all of this price action happens in time. Don't neglect the time factor. So this took about 7 days, right? This 30% pump to the upside, and then 7 more days for this retracement, okay, this 2-wave retracement. And so what we're seeing is what we call the principle of proportionality, or what Bob Prechter and AJ Frost call the guideline of equality, where in a 5-wave sequence, you tend to see 2 of those 5 waves be equal in price and in time, okay? And it's not equal, obviously, in price, or else it would just be a 2-wave that comes all the way here. That's why I call it the principle of proportionality, not equality. But anyway, you get what I'm just being pedantic, and I get what they mean. But there is some value to being precise, right, in your words. So I have wave 1, wave 2. If I take my Fibonacci retracement or my Fibonacci extension tool, I see that my wave 3 would end between the 1618 and the 2. That's where you typically have wave 3 end, right? And so that's exactly the site of my next big resistance at 30K. So this is what I'm seeing. I mean, everything is lining up. I'm not like forcing this on the charts. Those Fibonacci extension levels, I'm just working with what price action is showing me. So I think that that's what is likely to happen just based off of price action. Do you see we made a low here? I think we retest this low, and both, we get some symmetry in this. Do you see that? You see that symmetry in that inverse head and shoulders. On a larger time frame, you zoom out on the weekly, that is a huge reversal pattern. That's quintessential, inverse head and shoulders reversal pattern, signaling the bear market low right here. These were the bear market lows. You're basically at the inflection point, and that is the prime sort of pattern that most people are going to trade off of reversal, okay, on a larger time frame. But we can already see that here, okay? This is what I think is likely. Again, I think we're going to come down here. I think the reasons for that are we're going to print some kind of leading diagonal where wave 4 retraces beyond the 382 of wave 3, because you typically only get a 382 retracement, maximum 382 retracement of wave 3, but I think we're going to get a 618 retracement of wave 4 as well, because you typically get leading diagonals out of new trends, right? When you get impulses out of new trends, and this is a new uptrend, right? Out of our 450-day bear market or 450-day retracement or a correction, right? Or a big correction, then you're going to get this, okay? I think this is likely. But this is what I'm seeing. This is why I think the next move is up. And we're at resistance. We tried it once, we tried it twice, third time's a charm. This is what I'm seeing. Okay, now let's turn on an indicator or two and see what the indicators are saying, okay? I'm going to look at EMAs. I'm going to use all Fibonacci number EMAs. I'm going to use the 21, the 55, the 144, and the 89. Okay, I'm going to use these 4 EMAs. All 4 are Fibonacci numbers, and the yellow one's the 21, the blue one's the 55, the green one's 144, and the pink one's the 89. And what you can see with the EMAs here is we're executing what is called an EMA squeeze where price is trapped between two EMAs and is going to be squeezed up and out. Okay, and the reason it's likely to be squeezed up and not down is because the prevailing trend has been up. Do you see that? Boom, right there. So you can look at the EMAs, or you can just look at pure price action and say that this is a type of bull flag. You get a consolidation, you get a flagpole, consolidation, flagpole. Do you see what I mean? So this is what I think is likely and why I'm very long. I think we're at important resistance, right, as I marked with this band right here. And so the break of this takes us to a very, very big move, and that would be breaking a significant resistance that has lasted in Bitcoin specifically for about 53 days, okay? So the last part of this analysis is, I always say, if you're not sure what the market's doing in a particular asset, look down a watch list. You may find indications in other assets doing something similar, right? Because this market is kind of, it's not the same, but they're kind of doing similar things. So going in the general watch list, you can see some have already broke out. Let's take the first one, Moon River, and you got exactly that, Nicolas. You got exactly that EMA squeeze that I just mentioned, right? You came above the 21 EMA, you consolidated between the 21 and the 55, and you popped out, and you just met the 89 EMA right there. So that's an EMA squeeze that you saw in Moon River right there. In Filecoin, you saw something similar, but you saw it a bit ago, okay? And here's your squeeze, and here's your pop out. But again, you see that the cryptocurrency markets rather, are green today. And, a lot of people say, oh, weekend pumps, they're scams. You don't pump on the weekend, and if you do, you're gonna dump. But, I guess for people like that, they're selling, right? Or they're shorting the market. So that's pretty much it. Guys, if you got value, please like, share, and subscribe. This is all I have for you for today. I hope you're well positioned in this market, and you have good risk management, all that good stuff, right? Take care. I'll see you tomorrow.
The damage to begin, wreaking havoc on eardrums. We cold getting dumb, getting your crazy style. Late night, height division, we be moving with precision. With 10 spots popping off, making some decision about hitting them one at a time with these ill rhymes. My love at the door, free drink.